Welcome everyone. Welcome to another market wrap with Mr. Pankaj Pandey. This has been a good week to say the least. After, there have been so many weeks we have been waiting for some relief, and I think this week was that relief where everybody, even though we didn't gain much, it felt like finally the portfolio didn't go down. So let's understand. So what does it look like? What is the market outlook from here on?
Yeah, hi. Good evening. Wish you a happy new year and all the viewers. Yes, we started this year on a positive note. Calendar year 2025 this week, we've seen Nifty gaining about 0.75%. Good part is that the broader markets have also done well. I think there are a couple of reasons for that. One, the auto sales came out good, and that led to some bit of a short covering because FI positions were largely short. And I think beside that, some covering was also seen in BFSI as a space. So overall, it's a good beginning to this new year, and our sense is that going forward, volatility is going to be there because one, you'll have new policy measures which will come from the Trump government, and then budget expectations is again going to create some excitement or anxiety. And I think also, if you look at what we are clearly seeing is that the markets are holding around 200-day exponential moving average. So from a oversold condition, we have witnessed some bit of a recovery to 24,000 kind of levels. And I think overall sense is that support is at 23,300, and on the higher side, we would look at probably a recovery further to 24,400 kind of a levels. And a lot depends on how things move going forward, especially on the US side. Sectorally, what we like is BFSI, auto, and pharma, and PSUs are going to remain in focus. Let's see. It's going to be an eventful month, given the fact that you have result season also. Besides stock specific action, you will have some action coming from US as well.
Absolutely, sir. I think one of the biggest things that is gonna happen very soon is the demerger of ITC, and it's such a big company with so many investors. Everybody is wondering what will happen, what will it look like after the demerger, and what will be the valuations, kahan hoga, kya price aega. There are so many questions revolving around in everybody's mind. So, what's our take on this, sir?
So I'll try to sort of answer some of the questions. So one is overall this demerger we see as a win-win deal for the ITC shareholders. And see, the record date is 6th of January. So for every 10 shares of ITC, the investor or shareholder is going to get one share of ITC Hotels. And once the demerger happens, our sense is that the listing of ITC Hotel should happen somewhere in the February 2025. And ITC will hold about 40% stake, and remaining will be held by the shareholders. Now, coming to specific business, the benefit for ITC hotel shareholder is that the demerged business can pursue their asset right strategy because this is one business which requires good amount of capital, but the outlook for growth is pretty good. So our sense is that revenue for ITC hotel and EBITDA growth could be in the range of 14 to 18 odd percent, which is what you would not expect for a business like say cigarettes or even FMCG. Then it is starting with a pretty strong balance sheet. So that way, I think it will have the cash flows to sort of further do the growth. So that is a positive for ITC shareholders, hotel shareholders. Now, coming specific to ITC, I think what will happen is that the return ratios for ITC will improve post the demerger because there will be some cross synergies which will get created for the FMCG business, which is on the food side. And then in future also ITC has an option to exit further that 40% kind of stake what they would be holding. Now, coming specific to the valuation, our sense is that whenever the ITC hotel lists, ideally it could be in the range of about 150 odd rupees. And since the growth path is quite good, so this company is looking to expand their number of keys from say 13,000 to 18,000. Already spoke about the growth rate. So the fair value comes at about 195. So if it gets listed around that, our sense is that you will get an upside from say 155 to 195, and that is what the investors can play for. On the ITC side, I think post demerger, the stock would get adjusted by 12 to 15 odd rupees. And there we have a target price of 555. So I think it's a win-win for all of them. And especially hotel is something which is in favor at this point in time. Most of the hotel stocks are doing very well, largely because of the premiumization. And besides Indian hotels, I think this is one hotel which is catering to the premium category.
Absolutely, sir. So, with the new year also comes Q3 results, which will be very soon. They'll start with a barrage. So, any sectors that come to your mind which will be noticeable for Q3?
Oh, yes. So retail is one sector where things have been quite lull, or the growth was sort of missing, and whatever numbers have come out, or the pre-quarter retail sales numbers. So I think Avenue Supermart or DMart numbers came out. The numbers were quite decent. They witnessed a growth of 17.5%, which is very good because what we have seen up till now is a like-to-like sales growth of 7.5%. And I think that this stock has reacted wonderfully to that, up about 10, 11 odd percent. But I think this trend needs to sustain, and which is why we would still want to maintain a neutral view. But yes, it's a good beginning from a sector which had a very subdued expectation. And V2 Retail also came out with their quarterly update. Now, there the growth was 58 odd percent. I think the last year also growth was pretty good. Last 5 years, growth has been about, say, 21 odd percent. So I think one thing which has helped them is that Durga Puja, which was there in Q2 last year, is there this time in Q3. So from that perspective, that also helped. But in general, this company has been adding good amount of stores and looking at a double-digit kind of SSG growth rate. So numbers have been good. So nothing to sort of complain, at least from the retail side, and it's a good beginning, at least in a segment where the expectations have been quite muted.
Absolutely. I think another sector which has kind of surprised people is the auto. With in the previous quarter, we were discussing that majority of the people or even the industry was saying that this Q3 might be muted, but as the index shows, it might not be the case. So, what happened there?
Absolutely. I think auto numbers were quite a positive surprise, and that led to a sort of gain of 4% in the index itself. We had stocks like Maruti or iShare or M&M sort of doing very well. Now, when you look at the monthly numbers, December is considered to be a muted month, but the numbers came contrary to that. So Maruti sort of did exceptionally well in the PV side. It delivered a volume growth of nearly 30 odd percent. The volume growth on the export side was also pretty good. Then coming to say two-wheelers, Eicher Motor came out with good set of numbers. So this is another company which came out with a good set of numbers. And then I think when we look at a segment like say tractor, I think M&M continues to sort of do very well with a growth of 20 odd percent. Compared to that, Escorts did not do much. CV business was okay, remained flattish. I think buses is something which is doing very well there. And on the PV side or on the two-wheeler side, besides say Eicher, TVS continues to sort of do well. Whereas the other two players, especially say Bajaj Auto, did the numbers were not really good domestically, but the export numbers for all the two-wheelers were pretty good. But sum total, the numbers came out to be a quite a positive surprise, unlike a very subdued expectation which was being carried or which was the setup for the overall auto as a pack. So yes, what you're getting up till now is positive surprises, both in retail and autos.
Absolutely. How about BFSI? What's happening in BFSI?
So given the again numbers which have come out in the BFSI, I'm actually not disappointed. Numbers are quite encouraging because when you look at the numbers, although these are all tier two banks or select NBFCs, but the numbers are pretty good. So when you look at a specialized AFC like IRDA, so there the overall AUM growth was 36 odd percent. which is pretty good because this company has been guiding for 28 to 30% kind of a CAGR growth over the next 2 3 years. So definitely good set of numbers, and we have seen stock sort of reacting positively to this. Then you had some of the private banks like say CSP, which came out with pretty good set of numbers, up about 26 odd percent. Gold loan portfolio did very well, so that is another. And then you had PSUs like Bank of Maharashtra, which came out with 21% kind of a growth rate, or PNB delivering a growth rate of about 15 odd percent. So again, in banking, the overall expectation was that growth is going to be muted, and since RBI has put pressure, or overall sense is that the unsecured segment will not grow so much, so there'll be a pressure on margins. So I think there's some encouraging sign, especially on the overall growth side. But these are smaller companies. I think we need to see how the big boys play out, because that will shape the overall direction of credit. So up till now, numbers are good, but yes, keeping my fingers crossed in terms of to say how things will pan out. So still maintaining a bit of a cautious stance.
Absolutely. Another big thing will happen, which will happen very soon, is the Trump administration will come into power. So I think the sector that will be impacted the most in India, probably according to me, would be IT. So what changes can be expected there?
So no points for guessing that yes, IT is going to be in the limelight. I think till the 17th of January, because that is when the U.S. Department of Homeland is going to come up with a revised H-1B program. Now, till that time, volatility in IT index is going to be there. Up till now, one key changes what we have seen is that on the overall H1B visa requirements have come down structurally. But within that, the denial rates, especially during the previous Trump regime, so that had gone up to about 24%. And in the Biden regime, it had sort of come down to low single digits. Historically, it has remained in the range of say mid single digit to high single digit. So from that perspective, that is one of the biggest fears which will have. Now, when you look at the beneficiaries of this H-1B visa program, you will have companies like say Infosys, TCS, HCL, and Cognizant. All four put together, they accounted for 41% of the overall visa. So besides Amazon, Infosys was the biggest beneficiary in 2024. So they received about 8,140 visas. TCS had about 5,200, and HCL shared under 3,000. Now, so there are definitely going to be challenges, and I think Infosys could be the company which could get impacted the most. Now, there's some ways to sort of mitigate because companies also have been sort of anticipating this kind of a challenges. One is they're looking to hire more locally and sort of do a better mix of the offshore revenues. Then I think they are looking to sort of do more of automation to sort of curtail down the reliance on the labor. Then I think they are looking at alternate markets also outside US. Or the last option is to do some bit of a contracting. So we have already seen companies like say TCS since 2020. They have been ramping up the local hiring. So they have adding about 20,000 local hires. Infosys has been committing about 12,000 kind of number. So companies have been taking measures, but our sense is that from now onwards till say 17th Jan, you are going to see some or the other news flows there. And till that time, I think anxiety levels are going to be higher. But structurally, we don't see an issue because companies have seen this kind of a scenario. So not to say that it is going to sort of materially change the direction of the stock. But yes, cautious is the word I would like to sort of put it to this entire saga.
Absolutely, sir. And finally, it's time for the most awaited section of the week, hidden gem. Which will it be this time?
So I'm looking to recommend a banking stock. While banking has not been doing so well, but our sense is that things could change over the next few quarters. There is a potential for rate cuts also happening. Within banks, CSB, I already highlighted, came out with pretty good set of numbers. So their overall growth, especially in the Q3, was 26.5 or 27 odd percent. And good part is that 45% of their advances are in the gold loan side. And so gold loan is typically a secured loan. So So our sense is that that is not a segment which is going to witness a stress. And CSB Bank stands to sort of gain or relatively better off compared to any NBFCs because it has CASA to sort of lower their cost of funds. And while it fetches similar yield on the gold loans, so their spread or in that gold loan portfolio is pretty good. Now, what they're looking to do is that also build the non-gold portfolio, and which is where they are looking to sort of add branches. So they have added about 83 branches. They're looking to add more of products on the retail MSME side. So which is why we feel that overall next 2 3 years they can continue to grow at about 23 odd percent. And on the gold side, they're maintaining a LTV of about 73%. So they're quite comfortable there. So our sense is that they're building up the non-gold portfolio. Gold is already doing very well for them, and our sense is that gold prices are going to remain at elevated levels. So from that perspective, we don't really see much of a concern, and which is why I feel that this stock will continue to sort of do well. So we would expect a 23 to 25% kind of a growth rate with 1.5 times of ROA, and which is why I feel that this stock looks good at current levels from a risk reward perspective with a target price of 400.
Absolutely, sir. Well, that was it for this time. That is a wrap. Thank you so much for watching, everyone. If you have any questions, please put them down in the comments and we'll try to get back. Thank you so much for your time, sir.
Thank you.
Investment in securities market are subject to market risk. Read all the related documents carefully before investing.